Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Alex Coffey, a Senior Market Strategist at TD Ameritrade, to discuss technical levels to watch in the Nasdaq-100. Alex, it's great to see you as always. Welcome back to Trade Talks. And one of the things that stuck out to me when you sent your charts over was we're not looking at the typical stoplight pattern that we do for the Nasdaq-100, but more of a longer term one, because I did not think at least that we'd be having this conversation in terms of where the Nasdaq-100 started at the beginning of the year and where it ended, because expectations were pretty quite low to kick off 2023.
Exactly. And I think the fact that we're even in the midst of potentially making new all-time highs, not like at some point, but like in an imminent amount of time, I think is exactly to your point. There's very few people predicting that a year ago at this time. And it really goes to show as we look at this Nasdaq 100 performance chart going back to just before the pandemic at January 1st of 2020, it shows how far we've really come in terms of this almost full circle of tremendous volatility around the pandemic, the insane resurgence in the market, and then the collapse that we saw in 2022 around the inflation scares, geopolitical tensions. And we left last year at kind of the peak of uncertainty that we had seen absent kind of the pandemic fear. And it's been the kind of opposite of that in 2023. It's been a year of disinflation. It's been a year of stubborn but strong labor market, and this soft landing narrative has really taken on momentum as we round the final end of the year. So it's really impressive. And to your point of why we aren't looking at the stoplight is, well, quite frankly, the next point in the chart is a new all-time high. So looking for that as a potential resistance point of what's been a really, really impressive run up for the NASDAQ.
Yeah, I mean, not to mention we had a mini banking crisis thrown in there somewhere in March, and of course, heightened geopolitical tensions, especially in the fourth quarter of this year. And the market really just hasn't looked back. So if we take a look at your next chart here with Vol Q, Nasdaq 100 index volatility, basically the inverse picture.
Yeah, and I think this is important too to kind of put in context. You see the huge spike up back in 2020. That's around the pandemic. We hit almost 80 on this metric on a closing basis. That's really, really a pretty insane amount of implied volatility. It's really hard to sustain. It wasn't sustained for long. We saw things bottom out and normalize around kind of that 40 level where we remained for a long time. But 2023 has been a grind lower implied volatility. But what I thought was quite interesting, you see at the very far right of that chart, we actually are up off the floor. We're starting to see a tick up in implied volatility in spite of the fact that we actually continue to see higher prices for the NASDAQ 100 index. So we're around 20. It's still low relatively. You can see where it is relative to the last few years, but it's not on its lows, which of course we're down near 15, or if you go back to before the pandemic, sub 14 at 13.7 for that low point.
Yeah. And if we take a look at more near-term performance, what we're seeing in the market today based on the heat map, where is the outperformance?
Yeah, the outperformance today is it's really centered around some of these names that we're used to seeing in the green. You see a lot of the big mega cap companies bouncing back, and I think this highlights the story of the last few weeks, which has been this constant give and take between different parts of the market and sort of these magnificent seven, as they've been so called this year, as they've been the outperformers of this year. They're the outperformers in a way today, absent Alphabet. But it's, to me, the primary risk that faces equity markets outside of fundamentals and technicals is just if some of these names, NVIDIA, Microsoft, Apple, if they were to become underperformers at some point, where's that money going to go if money rotates out of them? And so that's something we're watching. That we've discussed as well when looking at things like the TD Ameritrade IMX.
All right, Alex, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.